Before we begin, please note that the views, opinions, and information shared during this presentation are those of the presenters, us, and not necessarily reflect the views of Anne Arundel County Association of Realtors. AACAR has not reviewed, edited, verified, or approved the content of this program and is not responsible for the accuracy or completeness of the information presented. Please use your own professional judgment and consult appropriate advisors when needed. I've got that. I think I need to let a few more people in. But with that, Bob, did you want to say anything this morning before we kick off?
No, not really. I just wanted to check out everything that's going on. There's a lot of new stuff going on in the lender world, so interesting to see what's going on.
Okay, awesome. All right, I'm going to admit another person, and then let's go ahead and, ladies, did you want to start with what? Oh, well, it's one of my favorite subjects, and it's one reason I didn't sell. I've never believed in selling out of an area I know, which is why local. What's the benefits of using a local lender? Why, and how does it benefit you? Jody, you want to start on your feelings of that?
Sure. I too have been in the business a long time, and I feel like there's many reasons for why local. One of them is, we kind of know the area. We have, relationships with you, and just being able to understand, the challenges that are going on with how to win the bid and listing up, win the listing when we're competing. So strategizing with the agent to present the best offer. And your thought?
Yeah, I would say, one thing I really try to sell about being local is meeting with the clients. I bring clients in my office all the time. You know, we all have online portals where people can do an application, but not everyone is comfortable with that. So it's important to have that ability to sit down with a client, especially, I mean, this is the biggest purchase of their life typically. So I feel like, especially the first time home buyers, they really want to, they're giving you all of their information, everything except for a DNA sample. So it's important for us to build that relationship. You have that relationship as the real estate agent, but for us, we're just this new person asking for a lot of information. So
Right.
meeting them in person, attending settlements is also important. Being there to answer the questions. Of course, we trust a lot of our local, um, you know, settlement officers. My brain is waking up, but it's good to be there to ask and or answer the questions that the buyers have about their loan. I mean, some of this stuff is they forget. I mean, you could have gone over it with them 2 weeks prior and now they're completely, ignorant to the whole process and when is their payment due and servicing. And so attending settlements and meeting with clients, I think, is one of the big things that working with a local lender can provide your clients.
I have a great story with that, or practical experience, where some of the older clients that we may have that are, maybe downsizing into 55 plus or something, they have no idea how to manage the software and upload things. And, so it's being able, like Ann said, to either meet with them and walk them through how to do some of the computer things that we all now do. And if they can't, picking up papers or, having them bring papers to the office. So there are some great practical reasons for that.
And then, ladies, we were talking about personality matching and how critical that can be, because we know what happens when you put two people who can't communicate together. So let's talk about that a little bit on how we can.
Yeah, I think, having choices are awesome, but sometimes it's overwhelming for a buyer who's like, trying to pick houses and now they got to pick a lender, So being able to say, hey, I think you're going to match personality with this person. And if that doesn't work, I have other resources. But having a personality that meshes and then they, can come visit with us in person or, whatever works. But then the flow of educating them, getting the documents, getting the paperwork done is so much smoother because you're not butting heads on a personality level. I think it's huge.
Well, and I think one of the strengths of realtors is we are very empathetic. Typically, we are empathetic people. And empathetic people are able, I believe, to match personalities better. And so I do think that as an agent, if I'm working, uh, I'm determining who I'm working with. Is this is this a driver? Is this someone who needs to be led? And then match them. And sometimes, you match them by generations too.
Right.
Yeah,
A really young buyer might need a more mature, or they might need to feel it's their buddy. And that's our piece of getting to know our client, and then how to match them with a lender.
Right.
Yeah, I think being, and Jody probably can relate to this, being a woman in a man's world, I will admit sometimes I'm not the fit for a client. If they want the suit wearing, sitting at the leather chair, with the big, bookcase behind them, I'm not your person, but I can tell you that being a female in this industry and has its benefits, because some people say, I need a female. I need someone who's maybe a little softer. And I'm not talking bad about any male lenders. I'm just saying that sometimes, like you said, it's a personality game that we play in this industry. And sometimes, you have to pick and choose who you're using based on who you're working with. And again, you know them better than we do. We get them and you've already spent months with them or talking to them or showing them houses. So we don't know as much about them as you do.
Yeah, I never had just one lender. I didn't think that was a good practice.
Right.
That I would, right?
Yes, agree. Agree.
Anyone have any comments or want to share anything about that? I see some names popping up.
Yeah, we got some familiar faces on here.
Bob, are you raising your hand? Would you like to?
Yeah. One of the things that for the local aspect of why you want to use a local one, a lot of the national things, there's things like prepayment penalties that if they're not in Maryland, Maryland has a lot of laws that affect local lenders and things like that. But there's protections in there that you don't get if you go to some of the national lenders. Like I don't want to name any names, but so that's something also to be considered is that and the other thing that I learned from some of the sessions I've been at recently is that surprisingly enough, like 70% of loan officers send a new client to a website to do the application instead of walking them through the application. And
what percentage did you say? Excuse me,
it was over 70%.
70?
70% send them to
my gosh.
a website to take the application. And the industry was like, why is that? Why are we doing this? It's like, why would you not work with your new client to make sure that because a lot of them never finish the application. So, which is an indication they're going somewhere else, that type of thing. So that's another reason to have a local person that is actually there, that is working with your agent and is going to give you that personalized attention that a lot of these other things just don't do. So a couple thoughts.
Bob, you talk about a good point. When we have clients that have filled out applications with some of these bigger lenders who aren't local, and then they have a pre-approval letter for 500,000, they're self-employed and they on paper made $32,000. They're not qualifying for a $500,000 house. And then we have to have that conversation with them as to why our pre-approval is so much different than what they have put in online with another lender. So I feel like working with a local lender, you're going to get that person that reviews, and not everybody. I mean, just because somebody sits in Annapolis doesn't mean they're great, right? But we have reputations, and we're out at the parties, we're out having drinks with the agents, we're out at educational, things with real estate agents. If our reputation starts to get tarnished, then that is huge in such a small area that we work in, across the state. I mean, I work with agents in Montgomery County and Howard County, so it's not just Anne Arundel County. um, reviewing those documents, because what buyers put in online applications is, I would say, you say 70% of them go online. I would say 80% of them put in the wrong information. So it's important to work with a lender who's reviewing all of that information.
Right.
Beth.
I just want to remind everyone that you can unmute yourself if you have a question.
I wanted to say good morning, everyone.
Good morning,
Good
Tina.
morning, Tia.
Morning. Sorry, I'm not on camera. I'm not as camera ready as you guys are this
We
morning.
don't care.
But I wasn't gonna miss this for the world. But I guess I just, as you guys were talking, I was like, you can't see me, but I'm shaking my head like, that's right, that's right. As an agent, I feel like I'm always going to strongly encourage my clients to go local, because of all of the things that you guys just mentioned, and because I've had some clients that they aren't the best with technology. So when you talk about
Right.
go upload this, go upload that, they're like,
They're
well,
like, what?
what's the upload? Right. You know what I mean? And that could be a discouraging factor for them, where they're like, you know what, whatever, I'm gonna give up. So just as Anne was sharing, having someone that they can go to, sit in the office, maybe bring the documents, even though that might be, an extra step for you all, but giving them that option at least could kind of make the process a little less scary and intimidating for some of these clients that just, need a little extra hand holding.
Yeah.
So local for me is always the way to go. And I can contact them on the weekends. Who doesn't want
Well,
that?
right.
Yeah.
And just, the communication, of just, we're here, we're going to be proactive, because we do have that ongoing relationship.
That's right. That's right. Yep, I agree.
Miss Cheryl, did you have something to say? Good morning.
Dina has a question. No, did somebody else raise their hand?
It's
Beth.
Maggie.
Hi, Maggie.
Hi there. So I agree with everything I've heard. I had an experience where we were using a national lender, and we get to the closing, and the buyer is surprised by all these additional fees and things, and we almost lost the deal. We had to call the lender and have her talk to him. She was ready to walk, and that's unfortunate because they don't give you all the right information, and they're quick to over approve them, as Ann said. So I think it's critical that we try to not enforce, but encourage our buyers to use local lenders. So I'm 100% with you guys.
Yeah, and I think, when you write an offer, a lot of agents that I work with do this. They put me on the email with the listing agent. Here's an offer from my buyer, here's my lender. And immediately I reply, because we're not always in a position where we can pick the phone up, right? That's the ideal. And Jody and I talked about this. We both do that, where we call the listing agent, introduce ourselves. Here's who we are. But I always reply back at a minimum and say, I am local. This is who I am. I'm 20 years in the business. You can call me anytime. The files don't leave our office. We underwrite them in-house. So I think it's important, if you're writing an offer and you have a Bank of America, you're not putting that loan officer on your email typically. And I've worked for the big banks and I know how they operate, but you're putting your local lender on that email with you and saying, hey, call her, call him. They're local. They're here. It's Sunday afternoon. They're available.
Right.
So I think that holds a lot of water when you're talking about multiple offers and just that ability to talk to someone. It's amazing how many listing agents or agents in general say, I never hear from the lender when I get the offer. Nobody calls me, nobody reaches out. So, put the lender on the email when you send the offer and get your lender to reply. And it's super important and can set your contract apart from others.
Right. Right. Because we're going to reiterate just how qualified they are and all the things that Ann said, just like the client is ready to go.
So, from a title company perspective, when we get something in and it's one of the national lenders, it's like, oh no, this is not going to go well. Just because with the local lenders, it's like I have I have women, and it's usually women. I have women in the closing department's cell phone number. So if something runs to after hours, I can reach out to them. They know me, I know them. They know, that we can work it out because we have a trust that's built over years of work. The other thing with the national lenders, they don't know the programs that the state of Maryland has, the MMP, and it's all very complicated. I've been to many classes and I still don't know all of that. And then our transfer tax structure here. A lot of states, the transfer tax are the same everywhere, all the counties. Every one of our counties is different. And if you get a lender from Oregon, they're not going to know that Maryland has a program where disabled veterans don't have to pay property taxes. They're not going to know that College Park has a $30,000 grant for people who work in College Park. They're not going to know about the teacher and firefighter discount for first time buyers in Prince George's County. There's just so many things that they don't know. And they give low estimates. And I mean, I've had friends who are like, oh, look at this great offer. Look at this deal. This is great. And I'm like, well, they miss this, they miss this, they miss this, and they miss this. So really the local lender's better. So you have to be very, very careful. And I know a lot of agents don't want to get involved, but if there's an out of state lender, you've got.
Yeah, be careful of the time zone difference too. I just talked to an agent yesterday who closed a deal with a lender out in California, and you know, she was saying that it was a nightmare for many reasons, but the time difference became a true nightmare because they were trying to settle and the lender was non-responsive and it was 7 o'clock at night and they were finally getting someone because it was a 3 hour difference. So just be careful of the time difference too when you're dealing with these lenders, whether it's the funding coming to the table, and a lot of states do it different. If you're working with a lender in California, they have an escrow. They don't do things the way we do things. So you can run into hurdles in that aspect too. Melanie, you're muted. Do you want to talk about the appraisal situation?
I muted him. Okay, this is our first one. So here we go, folks. I've had 6 people on another link. So I don't know how that happened, but so I've been seeing people dinging in. So that's what the problem is. Were we going to go into strategic closing tactics and things of that sort?
Let's talk about appraisal gaps and
Cool.
the new appraisal policies.
Okay.
Because I feel like this is something that a lot of agents don't know right now, what's happening in the appraisal world. So we were talking when we were setting this up with Melanie about how appraisal gaps and things of that nature work. Jody, do you want to talk a little bit about how we can structure a loan with the appraisal gap?
So a lot of there's a couple steps to it. One thing that I, as being local and trying to work with agents on a regular basis is having idea of kind of where the value is to begin with, what we think, market value is on a particular property, and then setting up the buyer for, if they need to escalate, this is what to expect, and strategize it around before we make the offer so we're ahead of the game. And it depends on how much they have to put down. If the more they have to put down, the less the difference between contract and appraisal influences or impacts the buyer. So it's trying to be proactive on it, and then really looking at how much, what the difference is they have in down payment. Like if they initially were structured for 15% down and we have a difference in the appraisal, then we can just structure it from our end as a 10% down, and they still bringing similar amount of cash. But hopefully they've kind of prepared themselves before we even get to that point.
Yeah, just because a house under appraises doesn't mean, first of all, the deal goes in the trash. I mean, yes, the buyer needs to, if the price isn't going to get lowered, the buyer has to acknowledge that they've agreed to pay more for the property, right? But we can also do it where like Jody said, if they were originally putting down 15%, maybe it's now a 10% down loan and it still works. Where it doesn't work is if a buyer's putting down 5%. We do have some 3% down programs, but they have to fit in that box. So, if you get a contract, let's say you have multiple contracts and somebody's putting down 5% and somebody's putting down 10%, and you're concerned about the value, you may be better off taking that 10% down, even if it's of different terms, only because if the value struggles to get where you need it to go, that deal may die at a 5% down if everybody doesn't agree, right? So from a cash perspective, you're better off at a 10% down, even if the terms are a little bit different. So the appraisal rules are changing a lot, and this is almost like a daily, feels like, occurrence. So we have a new thing to our industry, which is property data reports and no value. So there's multiple names that fly around for this. What this is where Fannie Mae and Freddie Mac, this is only on conventional loans, they have people that they have vetted with background checks and things. They are not appraisers, okay? They are coming out to the property and they are taking pictures of the property inside and outside, but there is no value associated with this report. So you have multiple layers here. You have a full appraisal. Everyone's aware of what that is. Then you have a waiver. That means the value's accepted. We're carrying on. All good. Then we have this hybrid appraisal, which is a property inspection, no value. And then we still have desk, like AVMs, automated values. We still have drive-bys. We don't see those as much. I feel like Fannie Mae and Freddie Mac are kind of getting away from appraisals. They've been collecting a lot of data. AI is helping, I'm sure, with that. So if you hear of a hybrid appraisal and someone's coming out to the property to take pictures, there may not be a value associated with that. So you may see that.
Who's paying for that?
The buyer's paying for that. So it's like a $325 cost, but these are people that are not associated with the lender. So they're on this mass list. So lenders are having to order them. We don't know who these people are. Again, they're not appraisers, they're picture takers.
What value do they bring to the purchaser?
Yeah.
Well, they're trying to just ensure that the property is still standing, right? So it still has to have the health and safety. If there's mold and there's water, those things are going to be flagged and have to be repaired. So it's basically Fannie Mae saying, or Freddie Mac saying, we accept this value, but we still want to know what the property condition is.
So it's Fannie Mae or Freddie Mac that's going to create this impetus.
Yes, it's already in place.
Yeah.
It's already in place. So we're seeing it. It has some concerns, I will admit, from a lender standpoint. We had one recently where the picture taker went out and he came back and said, I'm not doing this with this property. And I don't know the specifics, but he did pull it back and say, you need to order a full appraisal. So then, you have to call the agents and say, now we need a full appraisal. And it just kind of muddies the water. So, the other thing that we are seeing is a lot of waivers up to 10% down is where you'll get a waiver. And you're only going to get a waiver if you have a property that is under $1 million. You're not going to get anything over $1 million. And then in areas where maybe the values are a little bit stable, I take like Pasadena, for instance. If you have a house on the water that's $800,000 and a house across the street from the water that's $300,000, those are going to be hard areas to get waivers in. Most lenders should be able to run a property through their system and tell you if it can get a waiver prior to you writing the offer. So call your lender and say, if I give you this address, can you see if Susie and Joe can do this without an appraisal? That doesn't remove the financing contingency, but it does remove the value aspect of it. Does anybody have questions about that?
So yes, I have a question. Oh, I'm sorry. Beth, you want to go? I saw your hand.
I just wanted to say if there's an escalation clause, how does that get worked in when they're not doing an actual appraisal? Are these people assigning value?
You run it through at the higher value, wherever it ends up. Yeah.
Okay, Tia.
So are appraisals, I thought they were a requirement. Are you saying they're not going to be required?
Conventional loans are not always going to require.
Oh, got you. Okay. Okay.
Say always. Can you elaborate on the caveat of always?
We don't know until we run the address. It depends on the data that Fannie and Freddie have collected over the last probably 10 years of the area, the neighborhood. It also depends on the buyer,
Yeah,
if
it's reading the credit and stuff. So,
influenced by
yeah.
buyer credit, buyer down payment, debt to income. I mean, all of that gets played in.
Yeah.
Because it's a risk factor to the the investor and ultimately Fannie and Freddie. So the lower the risk, the more likely they open the door for a property waiver.
Okay, and if you have a question and you don't want to really ask it, if you type it in, I'm watching
But
the
we'd
chat.
love you to come off mute and talk to us.
Would love that. Yes.
I have a question.
There we go.
It's Christine. So our lender recently, our appraiser department, I guess, he gave us a spiel like in November, I hear appraisals are going to be much more lengthy. They're going to be at the house for maybe up to 90 minutes. And it's all going to be on a computer based, like an iPad or something. And they literally have to fill out the form while they're there. And it's going to be like we meet appraisers as listing agents with, our own comps and why it's so great in this neighborhood versus, on the one down the street or, stuff like that. But this is going to, if we stay the whole time, we're going to be there for an hour and a half or so. And I think that's all coming in November. Just wanted to hear from the lenders, I guess, what your thoughts are on that.
Like it's going to be an AI appraisal.
Yes. So, I had that date in my, they've already implemented that, but they have delayed it to allow appraisers to update their software because it's a big thing.
Yeah.
But yes, you are correct. The forms are getting a little bit more lengthy. The data that they're gonna want to, it's more about like the mechanical stuff of the property. It's been a little while because it doesn't go into effect, I believe, until September or maybe November. But yeah, it's just gonna be a lot more data that they're collecting at the property. So yes, you can assume that they're gonna be there a little bit longer.
And the details, they're going to, we're used to kind of them running through, if it's not VA or anything, but, kind of going through it quickly, but they're going to almost be like inspectors as well. And I think that could be another challenge for us.
Yes.
Yeah.
And I can try to find out the details of that information.
I can just go to Lisa's email from AACAR and try to click on that way.
Yeah, this is Maggie. I just sat in on a awareness training for that new appraisal form that's coming out. And it's going to put a lot more pressure or requirements on the agent to put more data in the MLS and or be available to give more information to the appraisal. They're getting rid of all the addendums and attachments that are normally there. Everything has to be inside the new document. So that's why it's taking more time. But also, if you give them data, the agent gives them data, closed data, sold data, that kind of thing, and they don't use it, they have to say why they didn't use it. So I did like that feature because oftentimes I've seen given them data and they don't use it or they decide to do something different with no reference to the information that I provided. So I'm glad to see that. And it's just going to be, in my mind, a lot more responsibility placed on the appraisals to do the right thing.
All right.
Maggie, I'm not aware of that as far as what you said about the comps, because I don't know how that would even be tracked. Now, if you're going to do a reconsideration of value, which I actually want to talk about that. So when was that? I thought I wrote the date down. May 2024, the regulations changed to where when an appraisal goes out to a buyer, every lender needs to include how that buyer can ask for a reconsideration of value. So at that point, yes, you can provide comms as a listing agent. And then the appraiser definitely needs to acknowledge why he's not using those. But those are sent in a form by the lender. So they've made that process a little easier for buyers to renegotiate a value, because ultimately it has to come from the buyer. The other thing I wanted to touch on with that is AMCs. If everyone doesn't know what an AMC is, this is what you should be asking when you are talking to a lender. Does your company use an AMC? An AMC is an appraisal management company. They have been around for a gazillion years. They became very popular after the financial crisis because lenders didn't want to be a part of that appraisal process. So they've hired third parties. These are national companies. They order appraisals through systems that order appraisals from appraisers all over. So you could have a house in downtown Annapolis, an appraiser coming from Delaware who knows nothing about downtown Annapolis. So AMCs can cut the value of an appraisal. They can require repairs of an appraisal on an appraisal that maybe weren't already, in the appraisal itself. So if you have the choice between a lender that uses an AMC and a lender that doesn't, I would say all day long, go with the lender who doesn't use the AMC, because you're going to get local appraisers who get paid their full amount. AMCs take a portion of an appraiser's fee.
Right.
So if we charge $550, our appraisers get $550. If you go with an AMC, they might get $300. So what's your quality of an appraiser who's
Right.
taking $300 versus $550?
Or they're charging more to the buyer for the same product.
Yeah.
Because the AMC is taking money.
A portion of it. Yeah. Yeah. So it's a question when you're comparing offers. Right now everyone's getting, I wish it wasn't so, but 10 offers on every property seems like, if it's a good property. Those are, if you have 2 offers and these lenders, and that's a good question. Do you use an AMC, especially if you feel like the values right now are getting a little bit
Especially-
scary,
Right, if we're escalating. Yeah.
Yeah. So AMCs is an important question to ask.
I had that happen, that situation you were talking about, and listing in Davidsonville, and the appraiser, when I opened the door, I had that feeling, and I was able to ask her privately if she had ever been in the zip code. And no, she really hadn't appraised out of DC.
Right.
So it was just a whole different world. So I'm really glad you're mentioning that. I had not heard the term, I had not heard AMC. So I feel like I've learned something very
Right. Appraisal management company.
awesome.
Well, doesn't everybody have to use an AMC unless they have a separate department? The whole point of that was that the lenders cannot communicate directly with the appraisers.
We have a separate department, so that's how we get around it.
Right.
So, like many of you and I have worked together, it's the local guys who are in Edgewater and Annapolis and, up in Westminster, like these guys are, we can call them. We don't talk value with them by any means, but they're here to help us, and they're just not out of state. They know the area. I think that's the key. It's not talking to the appraiser. I mean, I haven't talked to an appraiser in a really long time, but it's the knowledge of the area.
Mm-hmm.
We all know that our area has some very unique, who would ever, I have a friend that lives on Fleet Street. Who in the world would pay $1.5 million for this townhouse that I don't even think I could lay down? I mean, I'm I'm
It
5'11". I could probably lay this way and touch this wall and that wall. So who is paying that? Well, they are, but if you bring a guy from Alexander, somewhere down in Delaware or Virginia, it's really important.
Yeah.
I think it's important that when the appraiser calls the listing agent for the appointment, you're entitled to ask them, have you done appraisals in this zip code, in this city, and whatever?
Oh, good point.
I've once an appraiser called and asked me for directions. I was
Mm.
like,
But you're not gonna.
we have GPS and you're asking me for directions. No, I want a different appraiser. So you can push back against that, and you should be able to know whether that appraiser has experience.
Well, you're not going to push back on that with an AMC. I can tell you that because they are working for the buyer and you're the listing agent. You want a new appraiser. That's probably going to be a really bad conflict of interest.
I
So
got a new appraiser.
well, the
He
best
hung
thing
up
you can
You were
do
lucky.
for another appraiser.
the best thing you can do is meet an appraiser and have some comps available and any updates. So many listing agents do not meet appraisers, and then when we have a problem, they're the first one to complain. So
Right.
I always say, and when they're yelling at me, I say, did you meet the appraiser? Did you give them any comps? And they say, well, no, I gave them the code, or I don't live in the area. I have a guy right now who lives in Delaware and he's selling a house in Arnold. And I literally asked him yesterday, are you meeting the appraiser? Because it's a VA and he thinks there's going to be some issues with the deck and this, that, and the other. And I said, well, if you meet the appraiser, get him to tell you if there's any repairs because we're in a tight window and you can get started on them. And he said, well, I'm not meeting the appraiser. I live in Delaware. And I'm like, okay.
And comps or not comps, renovate like additions or anything they've done, recently that improve value. It's good for the appraiser to know, and even a dollar amount of that, how much it costs to replace that bathroom.
Yeah.
So those things are important.
And appraisers love it. Don't feel like you're offending them by giving them anything. They want it. I've done a lot of classes where I've brought appraisers in to talk this kind of stuff. And they say, please bring us all your data. It helps us. We're not mad about it.
Okay. That's good to know. That's really good information. Thank you for sharing that. I don't think I realized that. It's almost, I met one appraiser and I don't think I realized that because I'm thinking, let him do his job. I'm in the way, but hearing that now, I'll go into it differently for sure. So thank you for that.
Yes.
Yeah, definitely. And I think that goes back to working with local lenders, talking to the lender, is important when you can have those conversations.
And I've asked an appraiser, could I bring the comps that I've used? And they'll tell you yes or no. I did have one say I don't need them, but didn't care for him anyway.
Yeah.
Just want to.
Yeah.
Yeah, that's good. Really, we'd like to mute. We only have 5 more minutes. So if I'm reading the time right. So have questions come up, thoughts, anything you want to share?
A question, Melanie. Do you provide the appraisers with the comps when the value is too low? Or do you just do it automatically? I've heard a lot of people saying they take comps, when they meet the appraiser, but I mean, do you wait to see if the value is low and then provide them with the comps?
You can provide it up front with any recent, roof replacements or whatever has happened to the property. I would do it when you meet them.
Yes, the listing agent, you have to know what you based your price on. So you want to sell the appraiser just like you presented to the seller.
Yeah.
Okay, thank you.
Can you talk about the buyer having the right to appeal the appraisal coming up in November or whatever? Is that for all loans or just for conventional loans?
They're part of the appeal process for all loans. It is a paperwork. Conventional loans have changed their forms recently, but it's still a process that the buyer, requests technically.
Yeah, and everybody's probably heard the Tidewater law. We'll touch on that with VAs. VA is the only one that currently
Uses it.
comes and says that they have a low value and you have 48 hours to provide comps. I would say that, some people don't like VA contracts. I think it's amazing that the VA will tell you 2 days in advance. What they won't
Right.
tell you is how far they are off. Like agents will say to me, well, what are we talking? Are we talking 50,000 or 2,000? I'm like, I don't know. Could be $500. They don't tell you. But that's called the Tidewater. And if you hear that term, that means you have 48 hours to get comps to the lender. And yes, you as the listing agent should provide them and work with the buyer's agent. Or sometimes everyone just says, let it come in. Let's figure out where this thing's going to fall. But just so you know that term, I just wanted to mention that.
And there's another level that you can go to on the Tidewater. The same appraiser that did the appraisal reviews what you sent in, but there's another thing you can appeal to. I can't remember the name of it in VA, where somebody who's not the appraiser who came to the property looks at it, because my experience with Tidewater has not been very positive. In fact, the date of the I could tell that she'd done the appraisal and finished the appraisal before we sent in the Tidewater information.
Well, the VA is always going to back their appraisers. I will tell you that. But the VA does have a appraisal desk in Roanoke that we can call, and they will review the report. But I can tell you that 99% of the time they're going to back their appraiser. It's a hard fight if you don't win that fight, but they give you the opportunity as well. So, you don't always get that opportunity with a conventional or an FHA loan.
Well, on appraisals, you got to keep in mind how unique Anne Arundel County is. I mean, there's so many neighborhoods where no house is the same.
Right.
And they really need the help for that, because they're not going to go drive the neighborhood and see what all the houses look like and
But
things
they
like that.
should.
So well, they should, but you don't know if they did or not. And so the more information you give them about it, the better. And even places like Crofton, where the houses are more or less similar, well, they all have additions or modifications and stuff like that. So the appraiser, again, depending on how much time they're willing to spend on it, don't know those things. So the local knowledge that the agent has about the community and why this is worth so much, and that's why they're getting the buyer is willing to pay that, because ultimately market rate should be what buyer is willing to pay for a property. So being able to justify why this buyer is paying this, regardless of the thing. I mean, if it's in a new home subdivision that's only been built for 2 or 3 years, then they probably have pretty good comps. But other than that, in Anne Arundel County, the comps can be really skewed off if the appraiser isn't doing a very good job, and they need your help.
Yes.
True, Bob.
Especially with fewer transactions, they have less to pull from.
At what point does the appraiser go out to the property? Can you guys remind me of that?
As soon as we order it.
Like
they call the listing agent and schedule.
Oh, okay.
The VA gets 10 business days to get out to the property and get the report back. So that's a little bit longer than a conventional FHA is probably about, I don't know, 5 to 7 days we can get them back. But yeah, if you know the appraisal's been ordered and you don't hear from an appraiser within a couple days, probably a good idea to reach out to the lender.
Okay.
And the other thing, I know we're running out of time here, Melanie, I want to mention, one thing I was talking to Melanie about is Google the loan officer. So, some of us, you all have license numbers, and I know in the industry for you, if the license number looks like a social security number, then they are probably newer agents, right? So with lenders, our license number is usually 5 digits. If we've been in the 47641. 6 digits?
Six.
I had to do that.
High
It's still
five.
early. I do math for a living, right? So, that's a clear indication if the loan officer you're talking to has been, and I'm not taking away from people that are new in the industry, but at least you know who you're talking to, right? If this person's like, oh yeah, we can close it in a week. Well, you can't close a loan in a week anymore unless it's cash, because we have, rules that we have to adhere by. So Google them, do your homework, take a look at their reviews. I always send my reviews to the listing agent when I get a buyer's contract. Because I want them to know who I am. Now, if I had bad reviews, I probably wouldn't send them a link to my reviews, but I think it tells a lot about a company and the loan officer, because that is a very unbiased way to find out who you're working with from what other people are saying. So use Google as your tool to see who's on the other side of a transaction.
I think that's I think that's a great way to end the day. I don't want to hold people longer. I want to thank Education Committee. Bob, thank you for being on. And if Education Committee could stay on a little bit longer for our own wrap up. And we'd like you to know that, I mean, we have a great showing of our Education Committee here. So if there's something that you want to know, there is an area that you're interested in and you feel we could help by scheduling something, well, we'll have this every Saturday. We could cover it on Saturday or through the staff schedule classes. Let us know.
Yeah, next week is mold. So
I was just going to talk about it.
Yeah,
It's
go ahead. Sorry.
Birdie, who's the mold specialist, Steve Showalter, home inspector. They've been working together. And she used a term when I was talking to her yesterday that she feels it's so critical that we have mold literate agents. I wrote that down as soon as I heard it, mold literate agents. So think about joining us next week. And then the last, Pam, you're on the following week, you and Greg Fisk. So we'll have our current president and our past AACAR president talking about the tools and the benefits of your membership at AACAR that we don't use.
Yeah, very true.
There's a long list. So, so if you consider joining us, and then June's list of Saturday sessions will be out soon. And again, thank you all. I recognize so many names, so this is fun. It's always good to see you. I do apologize for me being distracting. I think some folks were jumping on the old link that I used for years in the past when I did it just for Coldwell Banker. So that was our problem.
Got it.
Everybody over, so that worked out. And I don't know, next week, put your hair in a ponytail or put on a scarf and put on your camera. It's great, people. So I hope you have a successful weekend.
Thanks, everybody. Thanks for coming in.
Bye-bye.
Bye-bye.
Jody,
Thank you all.